So before we get into the health insurance, there's just a couple things I want to cover. We're coming into the fall season. Most agents, I should say, either by a show of hands or in the chat, who's ready to win in the fall, right? Who's ready
I'd
to do
like
some business?
to.
Right. Let's go. You can absolutely do it. And every year we talk about this being separation season because most realtors will tell their buyers and buyers too, from Thanksgiving to spring, they're like, just chill. Like, just wait. And I can't understand that for the life of me. When you look at the data, buying a house between now and spring, you get a 3% discount off the list price. Just look at the raw data because everybody lays up, but there's still houses to be sold and bought. If you buy in the summer, you're paying like a 5% premium, right? So that's an 8% swing. So on a $200,000 house, you're talking about $16,000 in savings. You got one time to get that great purchase price, right? So dig in now because what you do today will give you the benefits of 60 to 90 days from now, and work smarter. So last meeting, we talked about Home IQ, and there were a lot of agents that actually signed up for it. If you haven't signed up for it, it's free for you. I highly recommend that you sign up for it. When I first got into this business, we literally used to get, I'm ashamed to say it, but I'm just going to be honest. We'd get a case of beer and a phone book, literally open up the phone book and start dialing names to get customers on the phone. With technology today, you can do it so much more efficiently. So I'm going to give you a screen share of our Home IQ here. And I want you to see what the results are looking like. So tell me if you can see my Home IQ screen.
I can see it.
Okay. So if you look at it, we sent 2,800 reports out over the past 30 days. Almost 1,900 were opened. That's a 68% open rate, right? Like, that's a great way to stay in front of your past clients and people that you know own homes. They don't even have to be somebody that you did business with for them to get this report from you. And the report is amazing, right? The reason they're opening it is because there's a lot of great information in there for them. And we've had a number of people reach out to us. And I'll just pull up my mom's. We've had a lot of people reach out to us about, hey, now's a good time for me to refinance? And the truth is, for some people it is. You want to take advantage of the rates when you can get it and the savings when you can get them. But some people it's not. And for the ones that it's not, I'm like, hey, pay attention. They're saying that rates are going to drop another 0.5% this year and another full percent next year. So are you getting the report that shows you how much money you could save? And so if I look through my mom's report and I scroll down here, on a 15-year, she would lose money if she refinanced, because my mom is like 3%. On a 30-year, she would lose money. Doesn't make sense for my mom to refinance. But there are a lot of clients out here that it makes sense for them to refinance. And with these rates dropping, it's going to open up a lot of opportunity for people that need to move. Like, they're in homes that don't fit their family, whether they're downsizing or upsizing. So it gives you a great opportunity to step in front of them. There's a lot of people asking, hey, Jeff, is the value that's showing up on my house truly what my house is worth? How real is that? Is this house really worth, 148? And then in that moment, I go, hey, would you like connected to the real estate agent that helped you buy that home to get a CMA, which is a comparative market analysis, which is a true evaluation of your home versus this algorithm? Or do you want me to connect you with an agent that I work with? And so if it's one of your clients, I'm sending them right back to you. So if you're not using Home IQ, it's a great way to stand in front of your past database. The other thing is the mortgage coach talking about the buyer agency agreement, the compensation, right? I want to walk through this one more time, just so you guys know that this is here for you, for your clients to know what does it cost them to hire an agent. For me, not paying for an agent is like stepping over dollars to pick up pennies. And I have this conversation more frequently now than I ever have, because so many people are like, well, I don't want to pay for a realtor. And I'm like, you absolutely should pay for representation. And so just know, on a $250,000 house, we can increase the loan amount if they're not doing the minimum financing. So we just increased the loan amount to cover your compensation. Their payment is $1,877. They're bringing $39,000 to close. If we wanted to increase the purchase price, so we increased it by the $7,500, which is your commission, that payment goes to $1,872. That's $4.68 difference. They're still bringing the same amount to close. These aren't lifestyle changes, right? Or the buyer can straight up pay it out of pocket. So the payment is $1,830. They're bringing the $46,000 instead of the $39,000. So they're bringing that $7,500 to close. The payment's only $46 difference a month. Or the seller can pay it, like we've always been seeing, and we've been seeing more frequently now than ever. And so that payment is $1,830, and they're bringing that $39,000. So just know that we can do this for you too. And then the other thing, real quick, before Todd gets started about the health insurance, the BAC and the CBC. I want Corey Beadle to speak to it. A lot of agents are shocked when we ask for it. They're like, well, hey, I didn't know I had to provide this. We have one we're working on right now where we're getting delayed on sending out the disclosures because we're still waiting for the documents. Lisa Jackson, I know your head's probably exploding because you taught this for probably the past 8 months. But Corey, can you speak to that real quick?
Yeah, absolutely. So I want to hit first on the BAC. So we ask for it on every single file. And we actually had a realtor last week that came back and said, hey, you're the only lender that I've got that's asking me for this, which I was very surprised by, because a good lender should be asking for it. There's potentially thousands of dollars that your buyer has not seen on a loan estimate if your lender doesn't realize that they owe that to you. So we ask for the BAC always to see how much is the commission that's going to be charged. And then we're going to ask you also, if you've got 3% on there, are you charging the full 3%? Or are you saying, hey, we're only going to do 2.5 on this one, so that we make sure we set it up right and we're representing the same thing to them that you are. The other thing is the CBC, it's referenced on the contract, but it's not included on the contract. So that's something only exists until you provide it to us. So we ask for it because otherwise what we'll do is set up a disclosure that shows that the 2.5%, let's say, is being paid by the buyer. That's a shocking amount of money if really it's coming from the listing agent, because it's coming from a CBC, a cooperating broker compensation agreement. So if you have one of those, I would just encourage you, every time you send in a BAC, if you've got a CBC that goes with it, make sure you send both of those in so that your buyers are getting the right numbers up front.
Mm-hmm.
We've had a couple of circumstances where it ends up that the buyer does owe a portion of the commission, and we either need to verify more funds than we have and the buyer doesn't have it, or we have to get additional documentation and go back into underwriting. So just encourage you, consider it part of your contract. When you send that into a lender, it's just as important, the BAC and the CBC.
So good. Any questions around that? Or is everybody already doing that correctly?
It's all good.
Okay.
Hi, Jeff. This is Holly Donahue. I do have a question. So currently right now I am in a transaction. I represent the buyer, and it is a cash deal. However, when I had requested the CBC, I was told that their brokerage, that is not a part of what entailed in their training, and they would not, she would not send it over. So I had to cross it out. So in regards to that, I know that there's no lender, so to speak, on this. Have you run into that in any of your transactions? This is the first that that had happened to me.
I have seen that there are some brokerages that are using, they're not using the PAR form, they're using like a created form that's similar, covers a lot of the same information, but it's not exactly the same. I have not seen anyone, we've heard rumblings that we're not going to institute it, but I haven't actually seen that in action yet. Now, from my understanding, a CBC won't necessarily always exist. It's only going to be there if you have that agreement with the other broker. But No, I have not seen that, Holly. That's an interesting one.
Okay, thank you.
Hi, this is Robin Zinger, and I work for that other company that she's referencing, EXP. And we were instructed to make it part of the negotiation and that they should put what they want on line 3A.
When you say they, Robin, who are you talking about? They?
EXP.
No. When you were saying they part of the negotiation that they should put on.
Oh, if you are a buyer agent,
Mhm.
you should put whatever fee that you want as part of the negotiation on the sales contract on line 3.
That's good.
Seller compensation. We do not pay broker to broker. So it's seller to broker. So it's part of the sales agreement. Because there's a misconception out there that EXP is not paying commission. That is not true. We are, it's a negotiation through the sales contract.
Thanks for speaking up, Robin. Like, I love the collaboration on these growth zones, because this is how we grow together, right? Like,
Well-
yeah.
Well, the thing is, I had somebody's like, oh, I hear you're not paying compensation. I said, that is not true. Here's the reason why. And I guess once our broker has spoken to other brokers, they get it. Why
Yep.
would you offer something and leave something on the table as a seller? You don't know what the buyer's agent has agreed with their buyer.
Mhm.
So if someone's offering 3% or 2.5%, and then you're putting that 3% out there, they're only getting 2.5%. It just complicates. Why would the seller leave money on the table? You don't know what it's going to be. So again, that's the whole thing that these agents are, I don't want to say steering, but they want to know, and they're only going to take their buyers to see houses that sellers are compensating. That doesn't make sense to me.
Well, Robin, like, I love what's happening here, right? And this is what needs to happen in our society. This is what needs to happen in all of our relationships. People that think differently than you, like, it needs to be communication, right?
Right.
So oftentimes, somebody may have a stance on something, and you're like, man, initially you're thinking that person's an idiot, or they're mean, or they're manipulative, or whatever. But when you sit down with the person and you have a conversation on why they're thinking what they're thinking, or why they're doing what they're doing, it's understandable and it makes sense. And when you said, when people sit down and have the conversation of why you guys are doing it that way, then it makes sense. So thank you so much
Oh,
for
you're
speaking
very
up.
welcome.
Yeah, because that's what we need to have. We need to have more conversations, less verbal judo of people trying to knock each other out with one-line verbal
Right.
judo punches, and more conversations of bringing us together. But yeah, Frank, you got your hand up?
I do. Years ago, I've been in the business about 33 years. Years ago, there was a lot of communication. Agents called each other, people talked on the phone, and nowadays it's very difficult to get them to pick up their cell phone. If you're lucky, they send you a text. So it could be very frustrating when you're working a transaction out with some of the agents who do not like to communicate whatsoever.
Frank, we see it on the lending side.
Yeah.
Like, for me to get a customer on the phone is tough.
Yeah.
Right. And so much more gets accomplished whenever I can have a conversation and understand what their goals are and what they're trying to do, so that I can get them into the right loan program. But oftentimes, I'll call them, leave a voicemail. I always follow up with a text. So on our team, the messaging is this: the email is the dump truck that's carrying the information. The text message that comes after the email is the punch in the face that goes, go read the dump truck. Right. Because emails get lost in spam. People don't read emails. I got an email this weekend from an agent referring a client to me. It went to my spam. I never got it. It was on Saturday. She texted me yesterday and goes, hey, Jeff, did you get the referral I gave you this weekend? I'm like, nope. And then I go digging through my spam, and there it is.
Mhm.
But if this is 30 years ago, what's happening? Like, I don't have a voicemail, right? They're calling me. I'm picking the phone up. We're having a conversation, and it's getting through. And we have to do a better job overall communicating. Right. And
Jeff,
having conversations.
On that
John.
spam thing, Google has been so just different in the past year or two. And I try to, anytime I send an agreement over to, it could be a lender, it could be to, an agent or whoever, I throw them a text message. Please check your spam just in case, because, you know, if they're not in your portfolio, Google doesn't recognize it and it does go into spam. So, you know, I try to keep that transparency. I'm pretty sure that you're aware of that, and just, we all need to be a little bit more communicative on everything throughout our life. We wouldn't be having the issues that we're having.
John, I just had a transaction with you. You were tremendous with texting. Like you and I were like bang, 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 back and forth, because you would text it and go, hey, it's coming over. And I was like, oh, we got it. Right. Like, I love the way you operate that way. It was probably 2014-ish that prior to that, I was staying up from 9 p.m. to 3 a.m. every night, sending anywhere from 300 to 700 emails a night, going, did you fix your credit? Do you want to work with me? Here's your good faith estimate, all this stuff. And then I read a statistic that said like 99.9% of text messages get opened, like 5% of emails get opened. And I'm like, why am I staying up till 3 a.m. sending emails that got a 5% chance of being opened? So now I follow every email with a text just to make sure that it's getting communicated. Because Frank, it's not 30 years ago and people aren't picking up the phone to have conversations. And what's crazier, and this is actually, it's sad, it's kind of funny though. Like if you call somebody without texting them first, like, hey, is now a good time to talk? They're like offended. Like I've had somebody actually go like, dude, how are you calling me without giving me a warning? I'm like, are you kidding me right now? Like that's what the phone is for. Like that's what it was built for. So, yeah, we just got to do a better job communicating. So thank you for communicating this.
Jeff,
So
can I
let's get in.
something?
Yeah. Go ahead, Karen.
You know what? I don't know about anybody else, but I agree with EXP on how they're handling things, because we're all supposed to negotiate our commissions. We're not supposed to get information from the listing agent, what the sellers, I mean, that's how it's set up, but that's what I thought we were supposed to do. I mean, that's why I thought this buyer agency thing and paying for BAC from the buyer supposed to be. We're supposed to negotiate our commissions as buyer agency.
Right.
I mean, by buyer agent. But what, anyway, about that CBC and not getting one, Frank, Hank Lerner just put out the newest PAR video, and you can check it out. And a lady that he had on, and I don't remember her name, had said that it's unethical not to give a CBC out. And she quoted 2 places in the ethics where it is that we have to do that. I have to go back and look at that video again, but I didn't know anybody was not doing that.
Right. No, like, I'm with you on the negotiation piece, and this is all brand new, right? So we're all learning together because it's brand spanking new, and we're growing through it. And I think the key thing is communicating, like having honest conversations with people, and what's in the best interest of your client that you're representing. So
Agreed.
good stuff. Yep. So I want to get into what I brought Todd Marley on here because health insurance is a big deal. And I don't know about you guys, but like, you know, my son got his arm burned last year working at a race, goes to the emergency room. They put salve on it and wrapped it. And I get a $3,000 bill in the mail. Then I call them, end up negotiating it down to $1,100. Personally, like 8 years ago, I heard I can go get like 125 slide CT scan of my heart to see if there's any blockage. I don't have any heart problems, but I'm like, look, I've spent more money on dumber stuff. Why not see if my heart's in good order? So I walk in, they're like, that's $2,200. I'm like, I'm paying cash. They're like, all right, it's $450. It's crazy, right? Like, I don't know any other industry that's like this. So Todd, whenever the Affordable Care Act came out, was telling me, he's like, hey man, I'm going to come up with a solution other than just being driven into this program. And that's what he has. And so I've referred a number of people to him. And Todd, are you still with us? Or are you?
Yeah, I'm still here.
Because your camera's not on. I don't know if you got your blanket over your head. Todd was cold this morning. He's wearing a short sleeves. There he is. Can you show your blanket? So he moved to Texas a while ago. He comes back to Pennsylvania, and now he's cold and he's wearing a blanket. And he's a big outdoors guy, so it's kind of funny he's got a blanket on.
I know.
But Todd has he has a healthcare, I don't even know what you call it, like healthcare insurance that every person I've referred to him, they call me back. The one girl called me back in tears, like crying about how much money he's going to save them and the coverage she's going to get. And she had a lot of chronic illnesses, I would say. And then the guy that Todd had, you know, he's a friend of both of ours. We both grew up with him. He passed away a few years ago. He was the agent that worked with Todd with her. And when he passed away, she called me and she's like, Jeff, thank you so much. Like, he really impacted me and my family's life in a great way. And so Todd has a unique healthcare or health insurance solution that I wanted him to share here, that if you have to have your own health insurance or you have to provide it for others, it may be a solution for you. It may not, but at least hear him out. So Todd, have at it.
Hi, good morning. Happy hump day. Hope you're all doing well and not freezing like I am, but here we are. All right. So
What's up,
health
Todd?
insurance. Can you hear me clearly? I know that cat.
Yeah, that's what I was saying. What's up, man?
How you doing?
Good. How are you?
Doing well, Jimmy. Doing well,
Good.
Jimmy. So health insurance, my goodness. I come from a financial planning background. And I did a lot of work with, investments and retirement. And we always kind of did things a little bit outside the box in the sense that I recognized early on that, profit and losses and all those types of things when you're looking at a financial situation, yeah, they're important. But what I found is that typically the rules and the regulations that are governing it, right, coming out of Washington, D.C., had an awful lot more impact, right? Just like you see, people that follow what the politicians are buying and selling, right? And so that was kind of my methodology. Well, when the ACA come out, I knew, and I hadn't been in health insurance at that time. I knew that there was loopholes. I knew that there was workarounds. I knew, because you read the laws, they always have little, outs. So, we went through it and I designed this program. We called it the Pro-Life Health Plan back then. And it was essentially, when you look at the ACA, and I don't even know if everybody knows what the ACA is, right? So Obamacare, right? ACA, UPMC, Highmark, these fully insured carriers. When you look at that type of coverage, it's designed to cover the massive, right? The massive claims, right? If you have $1 million claim and you owe $10,000 because you have a $10,000 out of pocket, you're happy, right? $1 million claim, you only owe 10 grand, you're happy. So it covers from the top down, and the hole in the coverage, right? Every health plan has a hole, like a lack of coverage, someplace that's not so great. The hole in the coverage is in the beginning, right? The deductible, the copays, the co-insurance, all the out-of-pocket expenses. So a lot of your normal everyday type claims, right, you're paying out of pocket, right, because it's subject to deductible. So when we designed this, we looked at it and we said, you know what, people are paying all this money for health insurance, and then their day-to-day stuff, they're paying out of pocket even more, so they really don't even feel like they have coverage. So when we designed it to pay from the bottom up, right, to cover the everyday stuff, and we figured out ways to protect on the back end. And that's all well and good. So today, when you go into the ACA, what is it good for? Well, the reason it's so expensive is because it's called guaranteed issue. It doesn't matter if you're a 6'2", 180-pound marathon runner, or you're a 5'2", 400-pound pizza eater with cancer and a heart attack, right? You're going to be able to get that coverage. There's no underwriting, right? Think about it in terms of mortgages. Right? You have somebody with an 800 credit score, you got somebody with a 400 credit score. You can do a lot better with somebody with an 800 credit score. Just same with health insurance. If you're healthy, right, you can get a much better rate based on the fact that you're not in this big public pool with all these other sick bellies, which is driving the cost up. Does that make sense? When you have, you can get a plan where it doesn't matter what your health is, they have to charge a lot more for that, right? So back then, when we came up with these programs, we designed them, and they were designed for people that were healthy. And since then, we've improved on it quite a bit. So when you're looking at health insurance, whether you're an individual or you're a company, there are a lot of plans and programs out there that give you the ability to do underwriting. And when you do underwriting, just like you do in the mortgage business, right, you're able to flush out and see what type of coverage you can get for a particular person based on their health. One of the best programs that I've come across, and I'm going to have to share my screen here.
So Todd, like what I've heard you say so far, do you have to be in good health to get health insurance from you? Is that what you're saying?
No, right? So when you talk to an individual, right? If I was talking to you, you know, Jeff, tell me a little bit about your situation. Okay, I have a wife, I have a kid, I got this, I got that. And there's the reason you would go on to the ACA is twofold. One, you're either have a lot of health issues or you don't make an awful lot of money, right? Because the ACA is tax subsidized via the federal government, right? You get tax credits that offset your premiums. So if you're going on the ACA, one of the first things I'm going to talk to you about is going to say, okay, how's your health? What's your income like? Now, if your income's relatively low or your health is relatively bad, the ACA is going to be really the best choice for you. And I can give you an example. Let me share my screen here. And I will give you an example. Oh, wrong thing. All right. So, for example, right. So here is an ACA quote sheet. This here is for a husband and wife and 2 kids. Husband and wife in their mid 50s and 2 kids in their 20s. And you can see that for the absolute cheapest possible plan available, you're looking at $1,658 a month with as much as $16,600 out of pocket. That's a pretty big day.
Yeah.
Right. So if you were unhealthy and weren't able to obtain any kind of coverage because you were, in a cancer, that's one thing that's great about the ACA, right? You could be in the middle of getting cancer treatments right now, and you could get this type of plan every open enrollment in November, and they have to provide it to you. But that's also why it's so expensive, right? And that's like the cheapest plan available. I mean, you can go down, you see there's 5-6 pages of this where these premiums easily can get up into the $2,000-3,000 range. Okay. Now, if you would come back over here, and I'm going to show you here, this is based on a family, right? That's making $300,000 a year. On a family of 4 making $300,000 a year, you're not qualifying for any type of tax credits, so you're paying full nut. Now, change that to somebody making $100,000, and you'll see that I put in $1 million. What did I do? Yeah, if you put in 100, annual tax household income, why is this not saying any credit? So it should show all kind of credits. Anyway, we pull that, see what's going on here. Right, you'll receive tax credits just for 50,000. Because I know it worked. Something's screwy here with the plant, with the machine. Anyway, you get tax credits, right? Where it'll reduce your premium quite a bit. And if you're making like 100,000, it's going to reduce it a lot, well over $1,000. When I was looking at this previously, if you're a family of 4 making 100,000, you're getting like $1,000 off of that bill. So your bill would only be, 500. Wow. So you're able to get a lot more coverage because of those tax credits. Okay. But if you're making too much income, then you're not receiving them. So then you have to start looking at alternatives. So successful agents like you guys that are working and making a good living, you might be making too much to receive a tax credit. And if you're not receiving a tax credit, then you're paying very expensive coverage because you're covering all the people that are previously sick. And if you're healthy, then there's alternatives. My favorite, and there are several of these, and we build these a bunch of different ways. So it always comes down to customization and how we can work with an individual person. But here's a great plan. This is what I personally hold on myself that works, acts, and functions like an ACA plan, because we have other plans that are what they call fixed indemnity plans that pay a specific benefit, and those work as well. But I love this one because there's no real holes, right? You have all your preventative services covered, right? This is a 0 deductible plan. $50 doctor visits, right? $250 copay for the ER. And you can see the pricing right here, you know, for a single employee all the way up to a family, right? And I love to build these things in a way that actually kind of help an individual family out. Because if you think about it, why did we buy health insurance? Right? Did we buy it for the occasional doctor visit? Yeah, maybe. I mean, you could just go pay the doctor, right? We buy health insurance for our worst day ever. Like my good friend that Jeff was talking about earlier, that passed away last year. He, had some stomach aches, and next thing you know, he found out his appendix was full of cancer and it burst, and he was gone within a year. Right now, when you're taking chemotherapy and you lose 100 pounds, and your hair is falling out, and you're sick every day, you folks are all self-employed. Right? You're buying health insurance for your worst day ever. You have that worst day, and now here you are getting cancer treatments, and you're sick to death. Guess what you're not doing? You're all sick, and what are you not doing? You're not working. Right? Your income's going to suffer. So because these plans are more affordable, because they're underwritten, and you have a healthy pool, we're able to provide a lot more coverage. And then what we do, one of the best things we do, especially for small business owners or self-employed people, is we put this coverage together, and then we build these supplementals to it that actually put money in your pocket. So the way mine personally is designed, right, everything would be covered utilizing this plan, but that supplemental that I have also is putting almost $6,000 a day into my pocket for every single day that I'm in the hospital. And the combination of those two plans is actually less expensive than what it would be to cost me to buy something on the ACA, because I make too much money to qualify for a tax credit. These types of programs, when you have underwritten, and if you're a company and you're providing benefits to your employees, and you want a group company plan, which are available as well, right? Most people are in what they call the fully insured market, which is UPMC or Highmark or Aetna, right? What we call the BUCAs. Again, those are all guaranteed issue. And when you have something that's guaranteed issue, you're taking the risk of everybody that's already sick and has problems, and that cost is being put onto you. That makes sense?
Yeah.
Right? So if you're healthy and you come out of that public swimming pool into your own little private swimming pool, you're going to get a much better rate and much better, coverage overall. So that kind of is a real high level intro into what's available out there. And there's several of these types of programs. The key is having somebody, an agent or a broker that you're working with in the health insurance space that has access to all of these different types of plans, and that are savvy enough to know how to put them together in the correct way to make sure that you have the correct coverage that you need and do it for the best price possible. And I said, we can do this down to an individual, and we can also do it for small groups, even large groups, utilizing this types of strategies. And that's really the best way to approach the healthcare space. Any other questions? You wanted some questions, Jeff?
So Todd, how complicated is it to use like this health insurance with the supplemental insurance versus just like having your, United Healthcare card when you walk into the doctor?
It's not complicated at all. We've got that. We've figured out ways to make that where it all is seamless now. Back in the day, you had to have a little bit of savviness on how to negotiate rates and stuff like that. But with this new particular program that we put together with the America's Choice plan, it really works. We call it an ACA clone. So it works like, acts like, functions like the ACA. In other words, your claims, one card, blah, 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 blah. No real holes in the coverage, but because it's underwritten, it's a much better price. And then that affords us to be able to add some of these indemnified benefits to the program to cover any deductibles, copays, out-of-pocket expenses, and also put money in your pocket when you are having that worst day ever, which is the whole purpose of why we buy this stuff in the first place.
So I'm going to say this again, because do you have to be in good health, or can you have a pre-existing condition and still have a conversation with you and potentially have good coverage from you versus the
Both,
ACA?
right? So we walk through the process. If there's, what's a pre-existing condition? Well, for the America's Choice, as long as you're not having, in the middle of having a heart attack or had cancer in the last 5 years, you can get it, right? If you're an insulin diabetic, okay, that's another issue. But unless you have something kind of pretty major, we're able to do it. Now, granted, if you have MS, or you have, you're middle of cancer treatment, or you just had 3 valves replaced last week, yeah, that's not going to fly. But if you're basically healthy, we can make it work.
Okay. Okay. Any other questions for Todd?
Just to
Anybody on the
piggyback
call?
on that, Jeff.
Yeah.
Todd, like I get it as far as the initial underwriting to get into this, and it might be a naive question. I know real estate a lot better than healthcare. But what about once you're in?
Once you're in, guaranteed renewable till 64.
Till 64, is that what you said?
Yeah. So your 64th year, once you turn 65, you'll be on Medicare. And that's also guaranteed issue that first year when you're turning 65. So once you have it, you're in guaranteed renewable until you go to Medicare.
Okay, thank you.
So that's the good part. Once if you get sick, you still get to keep the coverage. They're not going to kick you off.
Any other questions for Todd?
I have one. Do you offer eye and dental or just health?
Of course, yeah. We have multiple eye and dental plans that are available as well. And huge amounts of supplementals. There's so many different things, like specified disease. Like that's one of my favorite type additions, because again, right, the doctor visit's one thing, right? Having a broken finger is one thing, but having cancer or having a heart attack or having a quadruple bypass or a liver transplant, that's a totally different thing. So you can add what's called specified disease, which will pay literally as much as $1 million to you upon diagnosis. Right, just put money in your pocket to cover all the expenses. In fact, there's a statistic, and I can't remember what it is. I think it's like 65% of people go bankrupt because of a health issue, and they have health insurance, right? Because the health insurance just covers the expenses from the health cost, right? But what else is happening? Like with Bobby, he couldn't work. He couldn't function. He couldn't do the things that he normally did. So what happened? His income suffered. Right. So now your expenses are going through the roof because you have all these health, and your income's going down because you're sick. So to me, if you're going to put together a plan for somebody, you try to cover the risk. What's the risk? Well, the risk is out-of-pocket expenses from an illness, but also a severe decrease in the income that you receive because you're sick. And if we can put those two components together and still do it for less than what you'd be paying on the ACA, to me, that's a pretty wise move.
Good stuff. Any other questions? Good deal. Todd, thank you for taking the time to hop on here, brother. I appreciate you.
Always, Jeff.
Yep. All right, guys, let's win the fall. If you have any questions, we'll be shooting out Todd's contact information. You could reach out to him directly to have a one-on-one and see if it's a good fit for you. And we're here for you. Have fun winning in this next season in the fall. And if you need anything, we're here for you. Have a great day.